They say good things come to those who wait, but I don't think that whoever came up with that line was referring to newfound gold. After over 5 years since the initial discovery, we finally got an initial mineral resource estimate for Newfound Gold's Queensway project. But as it turns out, there's a good reason they waited. Perhaps, as at Seaman Demon over on the CEO.ca boards put it best, this is a murder scene. Let's dive in. Okay, so how bad is it? Well, after over 723,000 meters of drilling across over 3,000 holes, Newfound Gold has managed to put together a resource estimate that contains just 2 million ounces of gold. Not an ounce more or less, with across both the indicated and inferred resource categories, and is contained within both open pit and underground mining models. Specifically, the project as a whole contains 1.39 million ounces of gold within the indicated category at an average grade of 2.4 grams per ton, as well as 610,000 ounces of gold in the inferred category at 1.77 grams per ton. Of that, 140,000 ounces within the indicated category and 250,000 ounces within the inferred category are contained within the underground model, at grades of 5.76 and 4.44 grams per ton, respectively. For some context here, Newfound Gold since 2019 has spent a total of $269 million on exploration on the project. That is pure exploration expenditures as per the financial statement. It doesn't include travel expenses or administrative expenses, IR budgets, or anything else. Just exploration. That spend translates to over $134 in pure exploration expenditures on a per ounce basis, which isn't really all that great. The bright side here is that much of the resource is found within the high-grade veins that start at surface, with minimal overburden, meaning it can be accessed relatively easily. The resource is also along less than 5% of the 110-kilometer-long strike of two major structures that cross the property, with plenty of expansion potential. But it's still not a strong look for an initial resource estimate over 5 years in the making. So there's a number of issues here that present themselves right off the bat. And let's keep in mind that this is coming from a guy that, well, knows very little in terms of mining. And this analysis is based on what information is contained within just the news release, as the technical report has yet to be filed. Anyways, right off the top, it's clear Newfound Gold knows this is an underwhelming report. The third line within the announcement states that there is the potential for selective mining opportunities, which means that as a whole, they know this isn't going to be economic. Taking a step back, it's pretty obvious why. Here's the map of where the mineral resource estimate pit outlines are. Notice anything? We counted 32 different outlines for pits within 3 different regions of the property. Officially, there is 23 different zones of mineralization here, but some of those zones seem to have multiple pits associated with them. I'm no genius here, but that doesn't sound overly economic to me. And then the section maps basically show that a lot of that mineralization, well, isn't contained within an open pit shell, but doesn't exactly look all that well suited for underground mining either, based on how sporadic things are. Again, we're not experts here, so take that statement with a grain of salt, but it isn't exactly passing the smell test here. Now, Newfound Gold obviously knows there's a bit of a problem here with this, which is why they highlighted that 73% of the ounces are contained within 24% of the tonnage, whereas the open pit model is based on a 0.3 grams per ton cutoff. This high-grade area is based on a 2 gram per ton cutoff, which for those of you kind of new to this stuff, simply means it'll be more economic to mine and has an actual chance of maybe one day seeing production. This grade area contains 887,000 ounces of gold at an average grade of 7.16 grams per ton within the indicated category, and a further 133,000 ounces of gold at an average grade of 4.16 grams per ton gold within the inferred category. Newfound Gold has said that the high-grade stuff will be investigated as potential starter pits under the ongoing preliminary economic assessment for the property. Of course, this estimate also contains resources within an underground model. As we said previously, there's 142,000 indicated ounces at an average grade of 5.76 grams per ton and 250,000 inferred ounces at an average grade of 4.44 grams per ton. What we didn't say is that those ounces are spread across all 23 different zones on the property. The largest grouping here is found in the AFC core area, in a grouping of 7 different zones, which on a combined basis contains 96,000 inferred ounces at an average grade of 4.53 grams per ton. Now, we're assembling this before the markets have had a chance to actually digest the results. But Newfound Gold is a big name in the exploration game, so there's been plenty of commentary already, much of which, to our amusement, has been colorful. Aardvark cuts to the chase and calls the report crap, while Fool's Gold rather plainly says night-night NFG, and Bump and Run thinks shareholders are, well, going to get pounded. Whereas others, such as Dennis, seems to think the models are all wrong. Steven is more level-headed on this over on Twitter, suggesting that a bulk sample is conducted to cross-compare to the MRE to see how accurate things are. DDC, meanwhile, raises a valid point and asks where the money is going to come from to push forward. But I'd like to think I had the best question out there. Who knew about the results ahead of time? Quite frankly, guys, it doesn't make sense to me how the stock's down nearly 40% in the 6 months leading up to a resource estimate that, quite frankly, is a dud. All right, so let's wrap it up. If we could add our own thoughts to this, aside from the basic analysis we've already done, it's this. Since the start of the year, Newfound Gold has seen a massive management exodus, which no one seems to be talking about. Founder Colin Cattell stepped down as CEO on January 20th. Chief Development Officer Ron Hampton exited on February 18th. COO Greg Matheson left February 28th, and then Cattell resigned from the board on March 3rd, which isn't exactly a vote of confidence. At the same time, the share price here has cratered in recent months, including closing down 8% the session before these results were published. Obviously, this isn't a good look. So, where do things go from here? Newfound Gold has indicated that a preliminary economic assessment will be released late in the second quarter, so about 3 months from now, with the potential for a pre-feas or feasibility study to follow. In the interim, plans for the 2025 drill program are currently being finalized, with step-out and infill drilling scheduled to occur alongside exploratory drilling. Metallurgical test work is also underway, alongside permitting and environmental baseline studies. So things right now still appear to be pushing forward. That, of course, is also based on funding abilities. And after this disappointment, who knows what that will look like going forward. All right, guys, as always, if there's stories you want us to cover, please let us know in the comments section. I'm going to say Jay and I stayed up late to make this video for you guys because we knew it would be a hot one this morning, which is when it's going to be released, or you're watching it. So we appreciate all the engagement we're getting. If there's stories you want us to cover, let us know in the comments section. Also, if you haven't, please like this video and subscribe. I thank you all for watching.